Good day to everyone. Our today's lesson is disposal of assets account. As the name suggests, it is selling of an asset. But we don't hear this subject very often. Less common. Why? You know that we have two categories of account which you all have learned before. One is non-current assets. Other one is current assets. When we say current assets, we say stock or inventory, debtors or receivables, cash, bank balance, etc. Out of these examples, only one item is disposable or saleable, that is inventory. For inventory, we have a disposal account. Can you guess what it is? It is the trading account. In order to find out what's the profit that we got in dealing with the asset called inventory, what results we achieve. In order to do that, we have a thing called trading account. In order to deal with non-current assets, which is not frequent, the object of purchasing them is not for resale, it is for use. Once, maybe we will sell it. So, in order to know the results of using that assets over a period of time, it may not be 1 year, sometimes it can be 10 years, 20 years. That is why we hear less frequently. So that is what we use disposal of assets account. Otherwise, you can call it a mini trading account. So there is nothing new. Trading account, we are very familiar. This is a mini trading account. When you say trading account, all connected to the purchase of inventory, bringing that up to saleable condition, and the sales, everything is brought into one account and then dealt with. Same way, it is the same principle. If you are talking about a disposal of a particular asset, all relevant information with regard to that asset will have to be brought into one common platform, which is called disposal of assets account. In our previous lesson, we gave you a question. In that question session, we said that we threw this information on social media for people to react. And then I just repeat it in 1 minute, and then we'll go ahead with our lesson. In this, we request the members of the public to react to it. I will just read the question. A Limited purchased a motor vehicle for USD 332,000 on 1st January 2015 and on 30th June 2018 sold it for 15,000, but inadvertently credited to the motor vehicle account. Goes without saying, the sales proceeds. Their policy is to provide depreciation of 20% per annum on written down value. relevant extract of trial balance is as follows. Motor vehicle at cost 95,000, provisions for depreciation 45,000. Okay, the question is, did A Limited make profit or loss in disposing it? But now we are going to discuss the accounting aspect of it. Now, as you know that the first thing, okay, the sale proceed of the motor vehicle have been credited to the motor vehicle account, which technically could be considered wrong. So first we will have to correct it. So look at this one. Okay, motor vehicle 15,000 credit to disposal account because it is the sales proceed. And then we go to the next account, the motor vehicle account, where we show this 15,000. So the actual value of motor vehicles at cost is 120,000. Now we go back to the question where they say the company has a policy of providing 20% on written down value. We'll have to mark this word, because what is written down value? It is a type, the way we calculate depreciation of an asset. There are other methods also, as you all know. Straight line method is one. So this one, how do we do? Every time when we have a balance, we provide 20% on the first year, then we minus it and come to a written down value. That is cost minus depreciation. Written down value is shown. On that, on the second year, a 20% will be calculated. It will go on from year to year. Right. Now we go back to the accounts. Now, in order to sell the motor vehicle, we will have to transfer the value of the motor vehicle to the disposal account, which is shown here. 32,000 here. The second entry is made. Now we'll have to go back to there is accumulated provision of depreciation over a period of time lying in the provision for depreciation on motor vehicle account, which is given in the sum as 45,000. So we go back 45,000. Out of that, we have done two adjustments here. Initially, I will just go through that and I will explain to you. So we consider at the time of disposal in this account with regard to the motor vehicle, so much of depreciation is included. So we have to bring that to the disposal account. So we have debited that account and credited here. There is no other entries. So we find a profit of $254 in dealing with this disposal of asset. Right. We come back to the other aspect of it. As I told you, how we have calculated this figure. I will go back to that account again. Right. In this one, we have done a working separately. Okay. The original cost of the vehicle is 32,000. 20% depreciation for that year 2015 minus that is 25,600. That becomes the balance for calculation. Again 20%. Right. Now here we have done that, and then here we have done something. Okay. It says, now you read the question carefully. it says it was sold on 30th June. So that means that asset was not there for the whole year. And there again, they say 20% per annum. That means only for full year, it is 20%. So naturally, for half a year, it is only 10%. That is why only 10% is calculated. So this is the total figure which is to be removed, but you will have to take one more thing into consideration. That is, here we have a balance of 45,000. Again, in the question, they have very clearly stated this 45,000 as at 1st January. That means that year's depreciation is still not credited to the provision of depreciation account. That is why this half a year's depreciation, we have credited that to the motor vehicle account. So now this completes the answering of the thing. But there is a small warning, right? Now you will have to understand, we have not prepared a statement. We didn't prepare a statement of selling a motor vehicle. This is an account. Account means it is part of double entry. It has to have a prime entry book for you to initiate an entry. So even though it is not requested from the students to provide all these things, but you will have to understand, these things cannot come on a vacuum. It has to come on a proper prime entry book. Through that only this transaction will have to come. Now you notice here, we say in the description, we write things like motor vehicle disposal, right? In that we say motor vehicle. What does it mean? That means we are not describing anything. We are writing the name of the other entry in which account it is. Say for an example, if this 15,000 is moved out of, brought into the disposal account, this did not come from a vacuum. It came from an account on a double entry system. So this came from motor vehicle account. So that is the primary information that you will have to write on your description. Here, this other entry of this transaction is in motor vehicle account. This one, it is on profit on disposal. When they prepare the year-end account, it will be dealt in the profit and loss account. So having said that, now we will go back to the journal entry for you all to just understand. No double entries can be made without prime entry, not from the exam point of view, in the real life point of view. Now look at these things. Okay, the first entry was the wrong entry. So one of the reasons where the journal entries can be used is error correction. Now in this one, you see that the sale proceed was wrongly credited to an account that is now being corrected. So you see, and it has a traditional way of writing a journal entry. Motor vehicles account, debtor 2 and 2. And this 2 is written little inside. It is not on the same line like this. It is, so this is the traditional way of writing. And then every journal entry will have a small narration, being sale proceed credited to wrong account, whatever it is, for the people to follow it up. The second entry was transferring the cost of the vehicle to the disposal account. Other one is providing depreciation for that year. Then this one talks about transferring the accumulated depreciation. There is some spelling error here. In my typewriter, the A doesn't come. So pardon me. And then the other one is the profit that is transferred. So all accounts where there is no balance. So in motor vehicle disposal account, there is no balance. So it is completely cleared off. Thank you.